morning, everybody. It's always great to be here at this conference. We're getting ever closer to the time when we move rooms to the producer rooms in the other hall. But I'm going to tell you how close we are and how we're doing in that endeavor in this presentation. As most of you know, Artemis owns the Blackwater deposit, 100% owned, BC, Canada, Tier 1 jurisdiction. 12 million ounces in resources, 8 million ounces in reserves today, plus 400,000 ounces of life of mine annual production. It will be one of the largest gold producing facilities in Canada, in North America for that matter. A couple of differentiators, what we call our differentiators in our business. First of all, we, board and management, own around 40% of the company. We've put $200+ million of our own money alongside other capital market investors during that time since we started the company. We have in excess of $830 million of committed funding to fund our guided capex of 730 to 750 million Canadian to get us into production in our phase 1 stage. And we are a group of people who've done this not once but several times before. Between myself and Jeremy Langford, our COO and president, I think we've built 7 or 8 mines over the last 15 or 20 years. When people ask me, when I sit on panels at conferences like this, they ask me, particularly the retail type conferences, they ask, how do you invest in this sector? There's so much technical information. There are so many risks. And look, I can tell you as a professional in this industry for over 37 years, public information is one thing, and the 43-101 regime that we're all familiar with is also a good thing. But at the end of the day, investors have to rely on people who've been successful at least once, and ideally more than once, in operating and building in this sector. There's the team that are doing it for you as our investors and shareholders. I'm very proud to say that we've got close to 50% participation by women on our board, as well as that in our senior management ranks. Atlantic Gold was the predecessor of our company, Artemis. Artemis was spun out of Atlantic at the time of its sale. The relevance of this slide is I think the broader market calls this curve the Lassonde curve, not to take anything away from the legendary Mr. Lassonde. We internally call it the Atlantic curve. And what it exemplifies is while Atlantic did achieve an 1,129% return from inception to sale during a time when the GDXJ was down roughly 29%. From the time we commenced construction at Atlantic, we achieved a 400% return on investment on performance during a time when the GDXJ was down 9%. And I'm pleased to say that Artemis and its Blackwater project in construction as of this Q2 of this year, we're on track to achieve a similar sort of curve through to commissioning, commercial production, and operation. We've achieved a 36% return so far since the start of construction in a period when the GDXJ was down 11% in that same period. Those of you who are not sure where we are, we're located in central BC, not way up north in the Golden Triangle, but those of you who want to come and visit us in Vancouver, we can drive there in 4 or 5 hours. Prefer to fly you there in about 55 minutes and land in Prince George, and then we'll either drive there in 2.5 hours or catch a helicopter in about 45 minutes. As you can see, nice rolling high plateau hills, beautiful country. Wildfire country, as I'll touch on later, but beautiful country nevertheless. This is one of our pillars of our business model, saying we're going to do certain things and saying when we're going to do those certain things. It's a long list now. They're all checked, and we're very proud, and we work hard to defend that track record of doing what we say and doing it when we say we're going to do it. We have all the key permits to operate and to construct, and we commenced major works construction, as I said, at the end of Q1 of 2023. I think it's worth noting that countries like Australia, Canada, Brazil, others are outperforming in terms of gold price because of the currency exchange rate, and I think that's an advantage that countries like Canada and Australia will continue to have and enjoy. And it's also a bit of a natural hedge when the gold price is stronger, so is the exchange rate, and vice versa. So it tends to flatten out the volatility in our underlying commodity price. That's some pictures of the site as at June. It's progressed rapidly since then. I think we're getting close to around 37% complete by at the end of August. We're going to issue a full update on a quarterly basis, as we've earlier guided, and we expect to issue that September quarter update towards the end of October. But that's how it looked in June. Lots of construction activity on the left, and that's our campsite and other infrastructure on the right. This is the phasing element of our project, which is critical to its return performance and internal rate of return. We're in the midst of tweaking that, optimizing that. This was done when the exchange rate consensus was 79 cents and the Canadian dollar consensus was around 1,600. It's different today. Today's gold price is in Canadian dollars is around $2,800. This assumes a $2,000 gold price based on those consensus numbers. So even that alone, that $800 delta, is enough to cause us to rethink this phasing and also to optimize it, which we've always indicated we will do. We're expecting to issue that optimized feasibility study in around January of next year. I touched on this earlier, but we've guided to $730 to $750 million in capital expenditure to get to gold pour. We have committed funding in excess of $830 million. In addition to that, we have in-the-money warrants all in friendly hands at around $1, so there's a good chance that those will be exercised before August next year. And our banks have also supported us with a committed $40 million overrun facility. Some of the differentiators around our Blackwater project: a very low strip. People often say to me, well, it's a bit of a low-grade deposit at 0.7 or 0.8 grams per ton equivalent. And I say, well, yes and no. The average open pit grade globally is under 1 gram. It's closer to 0.9 grams per ton globally. So that puts us not far off the average. But really what I like to focus on is the strip ratio adjusted grade, and I think that's a metric that often isn't talked about. Because of the low strip ratio we have, there's some very strong economics at this project. Other attributes: a valley fill TSF design. The crest of our dam wall is all of 300 meters wide in our initial TSF dam wall. So the risk, both related to capital as well as technical, is low. Low diesel consumption because we're hauling loaded downhill really some nice topography that is natural, and these are natural benefits to this project. Central location, we're in an area called close to a place called Prince George, which is the capital of central British Columbia and the capital of the forestry business. So we've got lots of infrastructure and townships around which supply labor as well as contracting and other services. And finally, we've got 97% of our reserves are drilled off at a proven status. What does Artemis do differently on top of those differentiators that I talked about in the project? We do fixed price contracts on our key components of our construction contract. That's unique. It's very, very difficult to do. That's why most people don't do it. It's not because necessarily there's a premium attached. Frankly, if there is a premium, and maybe there is a premium at certain stages in the construction cycle for a fixed price contract, but the reality is I'm very happy to pay that premium for the certainty that a fixed price contract and fixed schedule contract brings us. We've done lots of grade control drilling. We have 16 times more data density than a typical proven reserve because of that grade control drilling practice that provides the first year or two of mill feed that gives us some visibility and certainty as to what that we will send to the mill in that first critical startup period. We decoupled the pre-strip for our TSF development by using a borrow pit concept very close to our TSF construction site. And then the amount of preparation that was put into geotech and other things that de-risk the construction phase. The worst thing, and it happens all the time in our business, the worst thing that can happen is you start construction and you have to stop for a reason. Or the other really bad thing is that the construction duration extends. They are the single biggest drivers to capital blowouts in our industry in construction and development. And as I mentioned earlier, we are a group of people who've done this before. Labor supply is a challenge for all of us, but we have some mitigating factors. I mentioned the forestry industry. The forestry industry is a big source of labor supply for us, skilled labor supply for us because of the downturn that we're seeing in the sector in central BC. We've got a strong Indigenous workforce, strong female workforce. There's the wind down of some major pipeline projects over in BC, which we're benefiting from. Steady stream of catalysts. We've checked off a lot of those boxes already. We're now headed towards a H2 2024 gold pour date. As I mentioned earlier, we have all the authorizations to operate and to complete construction, and our commissioning activities will start in the latter part of Q2 of 2024. We have a market cap of around 1.2 billion. I mentioned our shareholder base is strong. We've got some of the best institutions in the world in our sector. We board and management own about 40% of the company, and we enjoy a good retail support as well. Happy to take any further questions, Ovais.
Thanks, Stephen. There's a question on the floor.
Thank you. Good morning, Stephen. Congratulations for all the progress to date. One of the things you mentioned is that the insider shareholders own an impressive 200 million shares, $200 million worth of stock. Has there been continued purchases over the last while of continued additions to their holdings?
That's a layup question. You know the answer to that, Don.
I don't check Inc. every single day.
Short answer is yes.
I think I know in July, but I'm just wondering if you can add a little more than Jeremy Langford in July.
No, I think most of the senior management group have been buying the stock in the last 2 or 3 months. Yes.
Okay, and just as a follow-up question, and you're going to start heading into the home stretch of development, and what a lot of investors focus on for developers, in single asset developers, is whether they're fully funded through the home stretch. Can you give us any comment in terms of how you feel about what's remaining to be spent and where your balance sheet is?
Well, as I mentioned in the presentation, we're still guiding a 730 to 750 million capex spend for the project to get to first gold pour, and we have 830 million committed through our cash balances through the two streams, which we have partially drawn on, and then our project debt facility with some of the biggest and best banks in the world who fund our industry, providing a almost $400 million facility there. So that comprises the committed component of the 830. So we've got a buffer there, and then on top of that, as I mentioned, we've got about $29 million of in-the-money warrants that will be exercised prior to August, because they expire in August, if not before. And the banks have also provided, in addition to that base facility, a $40 million overrun facility. So I'm feeling pretty comfortable that we're well funded.
Okay, thank you for that.
Any other questions from the audience? Just one quick one from me, Stephen. In terms of the updated feasibility study that's expected, you're looking at an $800 delta that you talked about in terms of Canadian dollars, in terms of gold price. Is there an opportunity, you're looking at tweaking the mine plan, I'm guessing, but is there an opportunity to bring in additional ounces to that mine plan? Is that what the feasibility study is all about, or?
Good question, Avais. If one were to go on to the website, this is an abbreviated presentation deck, but in that, the full deck that's attached to our website, we talk about the additional ounces that would come into reserve should you re-optimize the pit at a higher gold price. And there's a slide in there that shows that I think we bring in circa 3 million ounces, additional ounces to reserve should we, say, re-optimize the pit at around the $2,000 US mark. But this study that I referenced earlier is solely focused on optimizing the phasing, the phase one. We may even have a phase 1A, what I call the phase 1A, which is a step between phase one and phase two, and then bringing phase two left earlier, and then phase three earlier, and maybe tweaking those throughputs through some smart changes to the circuit that we're planning. So that all of that I'll be able to talk to in a lot more detail with a lot more confidence once the 43-101 study is complete, and we can make reference to that study once it's out there.
And just one follow-up question for me. In terms of, with the project itself, it's very well defined, as you said as well. Is there any regional exploration upside that you guys are looking into right now, or is it the sole focus right now in just getting the project up and running?
Another good question. We don't often talk about it because when you have a mine life of 22 years, any additional ounces that are brought into a mine plan are going to be discounted so much that you could argue in times of constraints such as we're experiencing now in the capital markets that we shouldn't be spending anything on pursuing additional ounces, and we are not. Having said that, as we approach commissioning, I suspect that we will look at a small budget to start testing some of the targets that do exist, and we have something like 1,400 square kilometers of exploration ground around the Blackwater deposit, and typically, as you know, in your part of the business, those deposits often don't sit there alone. We know that there is other mineralization within our mineral claim package. We just haven't prioritized it, but we will start looking at those. There's drill intercepts, there's data that's there that we haven't really talked about, but we will start doing that as we get through the construction phase and into operation.
Excellent. We just out of time.